I think if you're starting a CPG business, the exciting thing to remember is stay close to your customer. No matter how big you
Most
get,
important thing.
no matter how big your team gets, how exciting that you get to put that product in someone's hands or watch them in front of a shelf or see how they use it and see if it's different than what you would expect. That's one of the most exciting things is like, you've got so many founders who are like, I want to be a household name. I want to be the next, I want to be the road of X, right? Like I want to be the next huge consumer brand. No matter how small you're starting, how big you're starting, one of the best things I think about a consumer brand is you get to interact with your customers.
Welcome to Inside the Fun, where we go on the other side of the table and learn about capital raising from VCs. I'm Helena Fogarty. I'm a fundraising expert who helps startups raise their seed and Series A rounds. And today I'm speaking with Zoe Jakubowich of VHS Ventures. Zoe is a fractional operator with over a decade of experience in strategic business planning, driving growth, and delivering large-scale cross-functional initiatives. She partners with CEOs and founders when a business is scaling faster than its team and structure, empowering clients across both B2B and consumer. Her former roles include head of strategy and business ops for Tula Skincare, navigating the brand through its acquisition by P&G, technical group product lead of monetization algorithms at Angie, as well as ops and analytics for startups incubated and owned by Walmart and Nordstrom. She's also part of the investment team at VHS Ventures, an early-stage venture capital firm focused on the next generation of consumer founders. The firm invests in seed, Series A, and some pre-seed rounds. Zoe sits on both sides of the table simultaneously, consulting directly with consumer brands on the operations and fundraising readiness, while also evaluating those same types of companies for investment. That dual vantage point makes her one of the most clear-eyed voices in CPG today. Thank you so much for coming in today.
Thank you so much for having me, Helena. I'm delighted to be here.
I'm so excited to get your perspective because you get to see both sides.
Yes,
So let's talk about it.
let's do it.
First, I want to find out how you got into where you are today, working on both sides of the table and with VHS Ventures.
Yeah. So how I got to where I am in terms of being an operator is a series of decisions that I would not say made sense in the time, but looking back, I can make it make a lot of sense. So I think I've always been in sort of a chief of staff that didn't know it at first.
I did that too.
Right?
Yeah,
All the
generally.
startups do.
Yeah.
You just kind of figure it out. You take on different roles because you like solving problems. You learn a different thing every different company that you go to. And then as you start to specialize, you're like, wait a second, there's so much more that I could do if I could help that other team, or there's dots that I'm connecting across functions. And so I started out my career in consulting with Ernst & Young, and I loved that every day was different, but I felt like we were working with large Fortune 500 companies, and I was like, I don't really feel like we're helping them that much.
Yeah.
And so I was like, how do I do this type of work, but where I can actually really make a difference? And so I started joining startups in strategy and operations roles, a little bit of analytics, a little bit of cross-functional project management, a lot of shepherding teams and getting work done and managing and reporting to executives. And so I did that for a few different retail tech companies, Nordstrom Trunk Club, Walmart Jet Black. And then I applied for an analytics role, customer insights and analytics, actually, at a private equity-backed startup called Tula Skincare.
Mm-hmm.
Met their leadership team, was on a little bit of a high horse about culture at the time, was probably talking about how important that was to me. And the CEO called me and asked if I would instead be interested in a strategy and ops role that she created and reported to her. And so I
That's cool.
was very lucky.
Yeah.
It was February 2020, so even more lucky. Terrible time for the world and an excellent time for skincare.
Yeah.
And so I joined that team. We doubled the team size. We launched into a new U.S. retailer. We went international. We eventually sold to Procter & Gamble in 2022, and it was incredible. And I loved learning everything. I loved being a part of everything. But I also burned out a little bit.
Yeah, but what an incredible 2.5 years or 2 years.
A little bit under 3.
Wow.
Yeah, I stayed a year post-acquisition, loved working with Procter & Gamble, and just thought I wanted to specialize.
Yeah.
And so I went the natural transition route from talking about Sephora every day to working for a large B2B marketplace in home services space. I joined Angie's List.
Natural move.
Naturally. I joined Angie's List. A good friend of mine was their strategy and ops leader from Trunk Club. And so she was there. They were hiring for someone on product. She needed somebody who understood business metrics, could go toe-to-toe with executives, and I guess could be taught product.
Yeah.
So they took a bet on me. Great team, learned a lot. Didn't have my hand in enough things and felt like I wanted to be more involved. I missed more of that sort of generalist role. And so around that time, a friend of mine had reached out and asked if I would consult for her business and help them think through, they had this super strong sales pipeline she built. She was the CEO of this data consulting company. But she's like, I don't know if we have the right process in place to take on that work. I'm not sure if our team's ready to scale. I don't know if I need to hire. What should we be doing to prepare for that work? And so I started consulting with them, and I was like, this is fun. I get to build processes alongside their team. Their team was incredible. Get to do workshops, test things out. And it's her fault. I blame her every day for why I decided to go independent. And so this was about a year and a half ago. I left Angie and I started building my own fractional operator business. And as you said, I work with two types of CEOs. One is the scaling CEO whose business is growing faster than the team. They have a need to sort of extend their bandwidth, a lot of different cross-functional projects. They can't do all of it. And so you could hire 3 really excellent specialists, but that's more management you have to do.
Yep.
Or I can come in and do a couple things well enough and then help you hire and bring the right full-time people on board. But I also work with early stage founders who love building their brand and business and are less excited about finance, tech, and ops, or building their first operating model and how they speak about that with investors.
Yeah.
And so that's been the business on the operator side. And that's how I then eventually fell into venture. About 6 months into building out this business, I live in New York. I'm networking as much as possible, going to all these incredible events, meeting amazing people, keep running into people in venture. Keep having conversations with me, a founder, and someone in venture. And so I was like, should I be doing this? What is this role? And a good friend of mine, Haley Zolo, she's a partner out of Starting Line in Chicago, which is an early stage consumer tech fund. I called her and I asked her advice. And she shared with me, she said, if you have it in you to operate one more time even, then you might not want to be in venture full time because you'll feel a little removed. But there's a lot of reasons why I think you'll really love it. And actually, I know someone who's a GP who's building out a fractional sort of fellowship investment team out of New York City named Sumit Shah.
An amazing person.
And a wonderful person. Why don't you chat with him? So she's the one who put me in touch with Sumit Shah, who is the general partner of VHS Ventures, which is a fund that I work with. And I have been partnered with him for a year.
Yeah.
A year and 2 days, I guess. It's almost a year exactly. As part of the investment team. And it's been an incredible learning experience. It is not something that I thought I was going to wind up in, but I've learned so much both about the investor perspective, seeing what it looks like for founders that are coming through it from the first time, founders that are more seasoned, that have raised from venture before, that have raised from other institutions before. And I focus primarily on health, beauty, and wellness with the fund. And I've just been fortunate to meet so many founders, to look at so many different business models. And for a chief of staff generalist brain, that is very exciting.
Yeah.
So it's been a fun road.
It sounds super exciting. Now, do you get a ton of inbound pitches, I guess?
Yes. I don't think, hearing what I hear from other people in the space, I don't think as much as some people get. I mean, we're starting to become a better known fund in the consumer space because of a lot of the wonderful work that Sumit has done. And as you said, he's excellent at being connected in the ecosystem, lifting all of us as well. But I do get a good amount of inbound. I'd say 90% of which are relevant for the fund in that they are consumer brands or consumer info. Yes.
Yeah,
That's why I was like, I've heard different cases, 10% that are completely out of our thesis.
Right.
Yeah.
Yeah. It's a problem.
Yes. A solvable one, I believe.
I know it's solvable, but it requires more oversight from founders on targeting the right investors at the right time.
Yeah. And I see it as almost an opportunity. It's not shooting into the dark. It's you have a business. It's your baby. You know exactly why it's valuable. How exciting it is to then go find the people that are going to be just as passionate about what you're building.
Yeah.
So take that step. Make sure that they're going to be excited. And if it's a little bit of like you might be interested for this reason you haven't thought about yet, that's okay. Just put that in the note.
Yeah.
Make that case. Do your homework.
I was just getting a little overwhelmed with inbound myself, and I'm not an investor. Like, I'm not an investor, and I get pitched all the time.
Why do you think that is?
I don't know. Tell me.
I don't know. I don't know. I was just
I don't think I'm not clear about this.
I have a client who actually sent me a lead, like a deal flow, right? Because she had been pitched on LinkedIn by a young early founder. And so I said, it's a consumer brand, happy to talk to them.
Yeah.
And so I did. And I asked her, I was like, why do you think he reached out to you? She goes, I have no idea. She's a founder of a consumer brand. She's not an investor, never has been, has never been in the financial space at all.
Yeah.
So I think it goes back to what you're saying of oversight. Like some of it is, I think there's just still, I knew nothing about venture before I started working the space, working with founders who are raising in venture, starting to educate myself a little bit more now being on the venture side of things. And I've learned so much. I'm still learning so much.
Yeah.
It's in anything. It's trying to educate. It's educating yourself on what's out there.
What I see the problem is I see, first of all, people are working with outdated lists. I'm not on any list, so I don't know
But you
how
know it.
I get there. But people are posting lists of non-active investors of funds that haven't even been operational for years, but they're posting it to get more followers in certain areas, right? As clickbait or as a lead. But then you also have these AI tools that are misinterpreting different people's roles. And for instance, I'm a big fan of Bordy. I like Bordy. I was an early adopter of Bordy, which is a AI networking thing. But Bordy was sending me pitches. And I'm like, Bordy, you know who I am.
You know more than this.
Yeah, come on, you can do better. But I see all these tools that are available, and I just don't see the discernment or the oversight. And I see a lot of the ability to make things go faster and do more, but with less targeting. And what's happening from the people I talk to, you guys, the investors, is like they're creating, investors are creating filters just as fast as people are learning new ways to spam investors.
I think, unfortunately, it's the same as what you hear about in the recruiting space as well, right? Is like AI review of resumes, and if you don't have the right buzzwords, or like bots applying to jobs and recruiters getting inundated. Like all of this is people learning how to use technology that is meant to enhance our thinking, not replace it. And so, yes, I agree with all of the things you're saying. I think there are tools that are learning off of bad data. And I could talk about data for far too long, but this to me is, and I imagine we'll probably get into this later because there are very few questions you can ask me where I won't eventually come back to the power of networking. But I think that so much of what I've really appreciated about the venture space over the past year is understanding where and how far a human connection can still go. And remembering that, like, even like we've already said, it's your business. You know it better than anyone. Be very well prepared on what it looks like, what your math is, what your unit economics are, what it would look like for you to be profitable, why you're not today. And if you're comfortable with that, how you're thinking about testing into new channels, what you're excited about, what you're worried about. You could talk about your business probably for days. Go find someone that's just as excited to talk about it with you. And there's plenty of tools that can help you find lists of potential people to reach out to, but don't just blindly rely on that, because what matters is still going to be that human connection and finding someone who is excited to ask you questions. And those are the types of founders where I have the most fun in conversations, because since like I'm an operator first and foremost, I want to hear how you're thinking about these things. I want to jam with you on these ideas. And that's usually what gets me excited about a founder or a brand or a business.
Yeah, for sure. And I think that the human connection is important. We talk a lot on here about warm intros and how important those are. But something that I'm also faced with when I'm asked for a warm intro, there has to be, like I'm extending a warm intro to my network, and I don't want to look like a fool.
Sorry.
A chump or a fool. So there has to be something distinctive, something that's going to catch the investor's eye and take you from, oh, here's another lame lead from Helena, which that would be terrible, so I try not to do that, to, oh my gosh, Helena sent me the best stuff ever. I'm going to look at everything she sends. Right.
I'm still balancing that, because I think one of the things I'm proud of is my ability to connect. I similarly, like I have my own CRM that I manage that in the year and a half of my business has grown from 60 to 750, which amazed. Like I'm like, wow, all these people I've met. But I'm still pretty good at, like, I'll have a conversation with someone, I'll be like, oh, this reminds me of this person you should talk to. And I've got sort of like the top list of people typically when I'm talking to founders, like if you need debt financing, if you need want to understand how loans would work for your business. Like I've got sort of, like the vendors that I'd recommend. But I also just have the connections that I'm like, they're great. You should just talk to them. And so I can still kind of do that mentally. But I also use Goodword, which is
Yeah.
a networking platform recently launched, founded by former chief of staff of Chief.
Yeah, we've had her on here.
Caroline. Wonderful. Yes, I'm also testing the different tools to sort of help amplify my network and my ability to manage it. But I always want to make a connection if I think it's mutually beneficial.
Yes.
If I think it's the right thing, I don't care so much, probably regret this, monetizing it.
Mm-hmm.
I will do it. But I will push somebody if I think that the way that they're going to present themselves is not how I would recommend. I will give someone all of the information for them to be successful.
Yeah.
And sometimes that's more effort, that I like. At the end of the day, like, not my circus, not my monkeys. I can't be responsible for how all 700 people would show up.
Mm-hmm.
And I will say no I'll say, like, I'll reach out and see if they're interested. I will always request a double opt-in.
Yes, always.
Especially as your network grows and
Mhm.
especially in an investor space. But I want to create connections because I think that that's so powerful and you never know where that could take somebody.
Yeah.
And I'll do the little bit of extra legwork to try to make sure that, like, polish them up or, like, help them shine. Because, yeah, similarly, like, that's my reputation.
Right.
My ability to connect you with someone that either you help each other now or in the future, or you just enjoy the conversation,
Mm-hmm.
that's my reputation.
Yeah.
So I will take the extra steps to make sure that you are prepared for that intro.
Yeah.
I will always check for a double opt-in. There's very few people in my network who've said, like, Zoe, don't worry, send it over. I'll probably still check.
I love even the value of a good conversation. Like that's wonderful.
And
Yeah.
I think truly, being in spaces like, because we met at a Consumer Brews event, being in spaces where you're networking often, I tell people two things with networking events. One is just get one good conversation out of it. Take some of the pressure off.
Yeah.
Just go have one good conversation. Don't necessarily put definitions on what good has to be.
Mm-hmm.
Just meet someone interesting. Talk about something makes you laugh. Like, then you're just getting more comfortable being out there.
Yeah.
And the other thing that I like to do is, if you go in the elevator with me, or if, like, we walk in together, you're probably stuck with me. And what I mean by that is I have identified you as, like, I'll be like, well, why don't we go over here? I'll introduce myself right away. I'll get information about you. And then I will, hopefully not against your will, but I will shepherd you through the room because I want to facilitate conversation.
Yeah.
It takes pressure off of me selfishly. Also, hopefully helps someone else have a buddy.
Yeah.
And at the end of the day, selfishly, it's also the best example of my work.
Yeah.
Is that I facilitate conversation, I create connections. And so I've now found somebody who I'm going to walk about the room, promenade around the room and connect them to different people and be like, oh, we were just talking about packaging. And over there, I see Andrew Stablin, my coworker at VHS Ventures. He works for Unilever full time. He's very passionate about packaging and what it means, particularly for food and bev brands. Why don't you guys connect?
Yeah. Amazing.
So those are the two things I think about with networking too, to, like, make it feel less.
You sound like a good person to ride up in the elevator with because
Come on
I'm
down.
an introvert. And, like, I give myself, if I'm feeling challenged by a networking session, I'm like, talk to 3 people.
Make it easy. Give yourself one achievable goal. Because I don't consider myself an extrovert.
Yeah.
I just have had a lot of caffeine. I know it's confusing, but there's some new term now I've heard that I think is what I am, which is just like that weird.
Introvert or something.
Yeah, have you seen that?
Yeah.
That.
I don't know.
I think I'm that.
I don't know. It's, I think that people need to lean into what's going to not knock them out for 3 days.
Yeah.
So if going to events is where you shine, awesome. If you can stomach going to events, that's also a great thing. If not, find other ways to connect with people.
Yeah. I love
If
that.
it's one-on-one, have lots of conversations. Like I have Julia Pimsler is in this space, and she's a great salesperson and a great fundraising person. And she mentioned that she sets aside her Friday to have like 5 conversations with people she hasn't spoken to in a while.
I love that.
But it also makes Friday a little fun.
Yeah.
You
There's so much, and it's, you're exactly right. I think whether it's an event and it's finding a way to make an event palatable.
Yeah.
It's giving yourself grace if, like, you just can't do that event that day. Like, I've walked into one and been like, whoo, too many people, and walked out around the holidays. It was like back to back. My friend can attest to this because she looked at me and I was like, I'll see you tomorrow. Like, I was out. But I will not say which event. I think it's figuring out how to make it work for you, to your point. And I think it's also, my friends have heard me say this, which is a funny little, perhaps silly trick, but if it helps somebody, I will share it. every morning, and I'm like, I think to myself, this is fun. And I almost trick myself. I'm like, I'm talking to new people. Like, I'm on a podcast. Like, this is fun.
This is fun.
This is fun.
This is so much fun.
For now. No, or I'll be like, I'll talk to clients about I love building operating models. I'm in a spreadsheet. This is fun.
Yeah.
I'm looking at packaging sourcing. This is fun. I'm learning. That's fun. Or I'm talking to someone. And most of the time, that's fun. And so I think it's a little bit of like adult play and like kind of being like, why wouldn't it be fun?
Yeah. I was reading something recently that was like, have a learning goal every day. And I was like, you know what? In my work, I learn so much.
Good.
Constantly. New business models, new companies, new problems. Like, it's so great.
I love that. And I think I wish that for everyone. And I think a lot of people don't have that.
Yeah.
I don't know. But I feel so fortunate that I do. And I'm glad that you do. And when people tell me, like, how lucky are we that we can learn something every day? Like, I'm not doing the same thing any day. And
True.
I'm so glad for that because I never was good at that.
So when we decided to have you on, I wanted to talk about CPG. And I wanted to talk about this place that I see, like, how do you get a CPG company started? Because funding is hard to get before you hit certain milestones. So what do you say to the people that, like, what is launching? So I had a company that was an apparel and activewear brand. And when I started, I read a very outdated book of how much it would cost to get started. And that was my goal, to raise money. And it was it was way too low, but at least it got me someplace. What does it take to get, I don't know, like a hair care brand launched these days?
It's funny. I think of it as, I think the intersection of where we are today with fundraising and what it takes to fundraise and what it takes to launch a business. When I think about those two things, I think it's less than people think. Because I think it's less so about what it takes to launch and more so about what it takes to garner enough outside investment interest.
Yeah.
And so for example, like I think about a beauty brand, like let's say you raise $300,000 to $500,000. You purchase your initial inventory, you start to set up maybe a couple people to help you, you start to test and get some word of mouth out there, you get the product into customers' hands, you start to build a community, you bring your community along into perhaps the product development side of things. You don't do necessarily a big buzzy launch. There are a lot of people that would argue for that, but that's momentum you have to maintain, right? And if you don't have the capital already secured to maintain that, that's really hard.
Yeah.
So I think about it as how much do you need to invest to launch and generate initial traction that will help outside investors pay attention so you can keep going?
Yeah, that's so good.
And so that's where, I'm so glad. That's where I think it's less than people think. And I also say that because I've talked with a lot of founders from a client perspective, but also on the investor side who have upped their fundraise targets because they want to go out and do it once, right? Which, fair enough. This is a second job on top of the job you signed up for, which was running your business. And now you have to run a fundraise process, which is brutal. And so you want to kind of do it one and done, be really successful, be one of those stories everyone posts on LinkedIn, and be able to have a lot of runway. But I actually think, that's harder with the climate you're in right now. You're setting yourself up for sort of a growth roadmap, especially if you raise from venture, that might not be the direction you want to continue taking the brand as you learn more.
Yeah.
And so I'd actually argue it's less than you think. Get your initial product in the door, test in different channels, be, at farmers markets, be having conversations initially with retailers, get your product into people's hands, get their perspectives on it, show that you have that community that wants to repurchase, and then take that true traction, that true engaged community to fundraise in a more serious way with a larger ticket.
Do you think VC is the fit? I mean, it feels like when I raised for my company, I was getting momentum, and through my network, I was able to raise 1.2 million.
Congrats.
It took a long time. It took way too long. I didn't know what I was doing. That's why
caveats aside, still
that's what I
congratulations.
do. What I do at this point, but it was all through my network. There was no institutional financing.
Yeah.
And I think that might be where many founders, not just CPG founders, but many founders have to start. Because not all of us are lucky enough to get the attention and hold the attention of institutional and get the belief of institutional financing, like of VCs, and get them to jump in and lead at like day zero.
I think that's right. I
Yeah.
think one of the first questions that I ask founders, whether they're speaking to me as a representative of VHS Ventures, so potentially looking for investment from a VC, or, a conversation networking, I ask, what are you looking for from that relationship besides capital?
Yeah.
And I say, because I don't believe venture is the right answer for most CPG brands for a few reasons. One, I think unless you have your growth plan ready and you just know you could grow faster if you threw more money at it, right? Like you're kind of ready to pour gasoline on the fire, venture could be a good option for you.
And that's not a hypothesis. Like you've tested that.
Exactly.
Yeah.
If that's the case, if a sack of money would allow you to grow like crazy, it's a good option for you. But I think in a lot of cases, you've tested a couple channels, you want to keep testing. Maybe you're still working on product market fit. You haven't gotten your product into enough people's hands because of inventory, because of the cash flow challenges that go with asset heavy businesses like a consumer product quite often. I would push more on friends and family, on angels, on inventory financing, especially if you're starting to look, for example, with retail, and that's a channel that you want to grow in. That's where I think you can get more opportunity to maintain more control over your business and create that more sustainable business model that makes a lot of sense in consumer space. Strong unit economics, path to profitability, healthy double, triple win.
Yeah.
That's what a win in a consumer space can look like for an investor quite often. And that's what can then get the attention of institutional financing.
And those investors who are looking for that double or triple, like they also get passionate about the product often and are excited about what's going on.
Yes.
And you see something in the shelves, you see something in real life, you're like, oh my gosh, there it is in the wild.
That's one of the best things about consumer.
Yeah.
And I have not worked in deep tech, so I don't know. I'm sure they're very exciting as well. But on the consumer space, I think I can explain it to my parents.
Yeah.
That's 90% of the battle of a conversation with my parents, is that I can be like, this is a product. I'm talking to the founder. So I think that's one of the things that's so exciting about consumer is like, we're all consumers. You can try the product. You can see it on the shelf, as you said. You can hand it to a friend and be like, what do you notice? You can ask them if they've tried anything like it. You can see what words customers use to describe the experience and think is like, that's not what I meant. Like you can really understand how it comes to life with like real-time feedback. And those are things that I think you can do with a smaller price tag than a lot of people realize when they set out to first raise and try to get some large institutional fundraising.
Yeah. The hype machine. The hype machine and wait lists. I mean, are these things real? Like you read about certain brands that are launching or have launched. Like let's say, I don't even know if you remember the pink sauce on TikTok.
Yeah.
Whew. Like what? It boggles my mind. Or like way back with, I can't remember the brand, but like a 10,000 person wait list for an ugly pair of pants. Are these real?
Tell me how you really feel. So I come from a background in analytics.
Yeah.
And I spend a lot of time seeing what I consider vanity metrics, which means that's a nice big number.
Yeah.
What is it telling me? And usually nothing that valuable. So, it's the same as like when I talk to clients and they're looking at like their traction slide, right? Like in a fundraise deck. Sometimes they'll have a metric on there and I'm like, great. Why do you want to put that on there? Like, what do you want to convey?
Yeah.
Or sometimes it's like, we moved from a commercial kitchen. We moved into a commercial kitchen from our cooking in our apartment. I'm like, that's fantastic. That's not the demand indicator, leading indicator that like we need for this slide. We should absolutely put that as a win. But like what you want to signal here is that you have proof of real sales coming, right? And so the wait list is quite interesting because usually I like to ask what the landing page looked like what are the different flows that got someone to that wait list? How long has that wait list been open? Like for example, we had a group of founder who had a substantial wait list because they had generated really great sales on TikTok Shop of, let's say, product A. And they were getting ready to launch product B that was going to be predominantly direct to consumer on their own site.
Yeah.
That wait list gives me a lot of confidence in the founder's ability to build a brand.
Yeah.
But that's a totally different channel. It's going to be a totally different product. Those consumers did not know that the wait list they were signing up for was going to be those different things. And that's okay. You're learning. But it doesn't create the same, as I ask these more questions, the number that you've presented me, it's a great number. It means something, but it's not quite the confidence that we're looking for. And so usually when I see these numbers, I'm the one who's like, that's nice. Like, let's dig in and understand. So that's how I react as an investor and more so as an operator.
Yeah.
What I like to see more, what the type of like sort of traction that means a little bit more to me is more community involved building. And what I mean by that is like when you see founders who have brought their communities in on every stage of their decisions, like maybe they're getting involved in packaging, maybe they're showing focus groups, maybe they're testing out formulas, trying different stages of the product. Because what that means is like as they're following along with your brand, they know what they're signing up for. It's not like they gave you their email 8 months ago.
Yeah.
And they don't remember.
Right.
They're actually truly following along with your brand. And so that's usually an example of an indication that I see and where I start to ask a little more questions and believe a little bit more about the revenue potential that can come from it versus like a big number on a wait list.
Yeah.
There's so many questions behind it.
When we're talking about like great sales for TikTok Shop, what kind of investment are people making in micro influencers, or is it organic? Like what is the realm? Like, I know we can't say exactly because
I don't think
everyone's
TikTok can
different.
say exactly.
Yes. But are those all paid?
TikTok, what I've seen be successful, there's two things I think of. One is usually it's more about creator generated content than brand generated content. And so there's a couple different platforms that you can use to get your product in the hands of creators, get them to start posting. You see what works. You can put some paid and boost behind that as the brand that gets them more eyeballs and then continues to bring more like sort of product interest. So that's one way. And then the other tactic I see is focusing on one product at a time, a hero product, not talking about your whole brand, not talking about your whole assortment. So when I think about success on TikTok Shop, it tells me a few things. People are interested in the product and people are looking for people that talk about your product, so social proof. Both of those are wonderful things that don't necessarily tell me your brand is very well known.
Yeah.
And so what it signals to me with the example I was giving is I believe you could build a brand, but I haven't seen it. I've seen you build a lot of interest around a product, but that's not the product you're selling now.
Yeah.
And so it's quite interesting to think about like what is the role of different channels and what success means on one channel for how it'll translate across others isn't always directly transferable. And that's the fun of it, right? Like you're going to see a lot of success potentially, or on Amazon, for example, where people are searching for a problem to generate a problem solution type of search.
Yeah.
They're not necessarily searching for your brand. And so translating that to be like, great, I can launch another product under the same brand and do just as well.
Right.
Those aren't necessarily transferable.
Yeah.
So those are the types of things, like when I see excellent numbers on TikTok, I'm usually asking these types of questions. I'm like, what have you invested in it? What have you seen work? And do you believe that'll transfer to other channels? Or what do you see as the role of TikTok in your channel strategy?
And if it's everything, seems like a risk.
If it's everything for their business,
Yeah.
and they want to be a bigger, let's say they want to be like the future of scalp care, and they want to be the brand that people think of for scalp care, it's a risk.
Yeah.
If they've got the one product doing well on TikTok, it could be great. I'd love to see, how some of these newer, because it's not new anymore, I'm just old, how these newer channels are new entryway points into brands becoming really big. But typically that behavior and having all of your business on TikTok Shop is tough to translate to true brand ownership.
Absolutely. So we talked a little bit about launching a brand. It may take less than people think. What do you see founders underestimating all the time?
I think a lot of founders look at certain distribution channels as silver bullets of growth. And so the example that I often see, and bear in mind on the investor side, I usually look at health, beauty, and wellness, is retail as the end all be all.
Yeah.
Growth projections that say we're going to get into, for example, Sephora, Target, whatever the retailer might be, second half of next year. Here's our growth projection.
Yeah.
And that's fabulous. Like, all growth projections are really made up. The better choice of words would be they're educated guesses, right? Like, it's what are the assumptions that are underlying this projection, and why do you believe that to be true?
Right.
What I often find is a lot of founders have really well thought out assumptions about the inventory for those purchase orders that they're going to need to acquire to support, even a 60, 100, 500 door rollout.
Yeah.
But the example I'll use with Sephora, when you launch a beauty brand in Sephora, quite often you are on a wall called the next big thing. It's this large multi-branded wall. You are probably ankle level. You have maybe 2 to 3 products. And ankle level for me is very low to the ground. You have maybe 2 to 3 products. The only opportunity you have to talk about your brand is called a shelf talker. It's about this big.
Yeah.
And so it's usually this like beautiful campaign imagery of a person with like a smear of product on their face. And so that, your competition, combined with the fact that the Sephora shopper, for example, usually comes in knowing what they want. They are going to discover, like there's absolutely an element of discovery in Sephora, but they're pretty intellectual or skintellectual. They're coming in with something they saw on TikTok or Amazon or YouTube, and they want to buy that product.
Yeah.
They might browse the next big thing, but like I said, all you have to talk about your brand is a shelf talker.
Yeah.
And so I think a lot of times founders haven't thought about the marketing strategy or the milestones they want their brand to hit from a digitally native or social and community perspective. They haven't thought about what that looks like before they get into a retailer like Sephora. And so then Sephora's looking to them to drive foot traffic. You can absolutely try to negotiate opportunities for co-marketing and to be part of some of their special roundups and all of that, but that's hard. That'll cost you a lot of money.
Yeah.
And if you're not showing that you're really bringing them in additive traffic, why would you be a top, competitor unless you're really building a category with them? So I think there's just so much more that goes into, we talked about launching a brand. For beauty, I wouldn't recommend launching with a retailer necessarily. There's some cases where I would say it might make sense. Like if you want for Credo and you like really want to have this like clean beauty, smaller, more indie credibility builder, feather in your cap, perhaps. But I think a lot of people look at a retail partner as like, that's it. That's what we need. And here's what it would take financially. And like, there's so much more, both financially and also operationally to consider to be successful. And I would usually say you should be doing like $5 to $10 million in sales before you go into one of these partners.
Yeah.
Because it's a hard fall to come back from if you don't prove successful in that channel.
Yeah.
So it's channel strategy. On the other hand, learning from seeing a lot of different business models with VHS Ventures in particular, food and bev is very different. A wide distribution is very important. Similarly, though, you are competing on a very busy shelf.
Yeah.
And depending on what category.
Ankle length, yes.
Ankle length.
Yeah.
Depending what category you're in, packaging becomes even more important. Merchandising becomes incredibly important. Price point becomes incredibly important. There's so many different levers to consider beyond just getting the purchase order.
Well, talk to me about health and beauty because I know a bit about supermarkets. No, but a lot about fashion.
Great.
When I was the head of a VC-backed food product, I learned that the supermarket world was more corrupt than the fashion world, which shocked me. I was like, wow, I have no idea what I'm getting paid on this invoice. They just keep on taking things out of it. Is health and beauty like that when you get with a retailer? What is that? Do you know what you're getting paid when you open up a relationship with Ulta or Sephora or
every partner is different in terms of what the negotiation process looks like. And there's like some set margins you can expect. There's differences in terms of like trade promotions and like how to consider how that goes into the margin.
Yeah.
So for example, with Tula Skincare, like success in Ulta, which Tula started with Ulta, it was like one shelf this big. I don't even know if this is visible, this big. And then went to like a 9-foot gondola.
Amazing.
Quickly.
Yeah.
And that was like all testament to a VP of sales who's now CEO at Personal Day, which is Lily Reinhart's brand, Amanda Domalechny. But incredible growth, really strong relationship with Ulta, very, very strong field sales team. So big investment in terms of budget management on bringing in people that were actually staffed in Ulta to talk about Tula.
Right.
Sephora does not have that business model.
Yeah.
Sephora is gifting, education, events. Like there's still some of that that's overlap, but the customer is completely different. The way that you're investing in the channel, the types of accoutrement that you have to be successful in those channels is very different. So in beauty in particular, and that's just specialty beauty. Those are the two top US specialty beauty retailers, and they're totally different.
Mm-hmm.
They're great to work with. You got to go in ready to play.
Yeah.
And so even like, for example, like when we would do market decks for these retailers, like you're working on those for weeks because you have full 360 campaign plans about what the influencer strategy could look like, the different PR media partners that you're going to be pitching, how you're thinking about what the shelf's going to look like, all these mock-ups. Like you're really investing in those relationships, and that's critical to show them that you you mean business, you're driving foot traffic to the store, you're co-marketing. There's a lot that goes into it, and it looks very different in different stores. And so the piece that I would say is like the unexpected side of things on like charges you didn't expect. The one that I know happens, and I've learned more about recently, courtesy of a good friend of mine who used to work at Stored 3PL and has now moved from that space to a company called Retail Ready.
Yeah. So
like if all retailers have a requirement of how the shipment has to be received, right? Probably very standard in any partner. Nordstrom, for example, like they might have requirements that you have to split by store versus they take care of it and actually manage in their distribution center for some of the other partners. And if you do it wrong, you get a chargeback.
Oh, yes.
They'll keep it. They'll figure it out, but you get a chargeback. And so that problem exists in beauty. I think exists everywhere.
Yeah.
And shout out like Retail Ready, a good friend, Thea. This company is trying to fix that because like, as you've probably seen, the conversations between a brand, a retailer, a 3PL, and then the people actually on the floor that have to execute this, and they're like, they don't know.
Yeah.
And it can be so varied by product type, by retailer you're shipping to, and typically warehouses are carrying apparel, beauty, supplements, food and bev, everything.
Yeah.
So that communication is very broken. Those chargebacks absolutely happen in beauty. Those chargebacks happen everywhere. That's an example that I think founders are always like, and so it's good to invest in a good partner on the logistics side that can help preempt that as much as possible or has seen it.
Yeah. Chargebacks are a big deal. Like, I mean, I spent
talk about this more.
When I was in business school, I spent a year working in focused only on chargebacks at a very prominent fashion brand, but a smaller fashion brand, a newer fashion brand. And I mean, 12% of their revenue was going to chargebacks.
And I think that's what I found most surprising is it's such a good example of a place that's across all industries where to no fault of anyone, but everyone's kind of like, right? Because it's this sort of gray area.
Yeah.
And then you get charged back, like typically, 12% of the invoice.
Yeah.
Completely changes your margins.
Yeah.
Completely. And so that happens in specialty retail as well. But the other thing I would say, like to your original question, is like what it takes from a trade promotion standpoint or what the different levers are that you can pull in different retailers in health and beauty and wellness.
Yeah.
Those really you need to learn and understand from the retailer.
Yeah. But I like how you said that, building a brand is important. To me, building a brand and not relying on the wholesale like the retail partners gives you more power.
Yes.
Gives you more power to negotiate shelf space, gives you more power in driving traffic. It just helps you.
Yes.
So relying too heavily on the retail partners is just, in my opinion, not always a good choice.
I agree. And I think it's back to, it is so something to be proud of that a retailer wants you and is interested, right? A buyer is excited.
Incredible.
They want to create a category for you. Incredible. Two things I'd say, ask yourself if your brand is ready.
Yeah.
Are you, because if you don't make it, if they don't keep you on shelf, how are you going to get back on there? I don't know. Two, financially, are you ready? And that goes into cash flow management, especially in consumer is very, a lot of challenges, cash flow, inventory-based businesses quite often. So ask yourself those two questions. Still be incredibly proud of the interest, but keep that warm if it's not the right time for your brand.
Yeah. So investment, outside capital. We talked a little bit about angels. We talked about your network and then institutional. What are some other sources for CPG brands?
Yeah. So I think venture, is one of the most visible.
Mm-hmm.
But I also think what people don't talk about is like most funds invest in like 2% of the deals they see.
Yeah.
I'm part-time and I look at like 5 to 10 businesses a week.
Yeah.
And so there are so many incredible, deserved, wonderful stories of people raising on LinkedIn and out there. That's great, but you're not, that's the exception in a lot of cases. So there are other options and there still can get you where you need to be as a business. And in a lot of cases with a more maintenance of control over your business. So a few that I think about, and there's 3 in particular where I'll name the companies. And if anyone in podcast land like wants to reach out to actually get connections to these companies, please feel free, because they're just excellent partners that I've put in touch with folks, even when founders are just even considering what it could look like.
Yeah.
The first one is Lunar Capital, which is non-dilutive inventory financing. And so I met a good friend there, Jackie Bay. They invest typically when a business has built a really strong digital presence and is going into retail for the first time.
Yeah.
And she comes from merchandising and buying at Target, so she's had a lot of experience in big retail. And they can look at the communications that you've had and will actually invest before you've received the purchase order.
Amazing.
Then they will only collect money after you've been paid by the retailer.
Mm-hmm.
So really great option for sort of those brands that have proven out that demand and are just sort of taking the step and need the capital to do so. So that's one. Second one I think of is Spring Cash. Will Fisher is one of the founders. They have PO financing, invoice refactoring, another fancy word I am forgetting. But basically a lot of options that help with the cash flow gaps that are naturally created from inventory-based businesses.
Yeah.
So you receive a purchase order, amazing. You have to go put up a ton of money to purchase raw materials and get your manufacturer working on that months before the retailer is going to send you any money.
Months, like a lot of months.
Yes, a lot of months. You're right. And so that's the crunch, right? Like that's the problem. And I think so many founders go and then they're like, great, I have this PO. Why isn't VC interested? And it's like, for me as an operator, because I know that this is a tricky situation. I actually think that, PO financing, inventory financing might be a better option. So Spring is another great one. The third one that I think of is more of a platform to see options of loans if you're a small business, and that's Bridge. Okay. So it's free for founders. You upload your information. You can do so anonymously. And within 48 hours, you'll have like options of loans, and the platform will actually help you navigate that process, understand if something's right for you.
Mm-hmm. Is that spelled like bridge, like a normal bridge, or is it BRY?
Like build a bridge. Like,
oh, cool. Nice.
Like a normal bridge.
Excellent.
Yes. Mike Gelb is my contact there. But
he's consumer.
He's consumer brewers. Yes. And so the whole idea being, how do you help create access to lenders for all of these small businesses that otherwise don't have the same or don't have the time to go find all these options? So those are some that I consider. Like I said, I like creating connections, and I think it never hurts to talk to people about what your options are.
Yeah.
Venture is just the one that's talked about most publicly.
Yeah, there needs to be an overall capital strategy, I think, especially when you're dealing with an inventory-based business.
Exactly. And you're early.
Yeah. And the first time I got a sizable wire, I was like, I'm going to be so responsible with this money. I'm going to spend it all on inventory. Oh, my God. Not the right choice. No.
Yeah. See, that's why. And if you raise inventory financing, you spend on inventory, then you can go get growth equity, growth capital, and spend it on
that money
marketing and
spent on growth, not on inventory.
Exactly.
Yeah.
So there's people that help with that sort of thing of like cobbling together what the right sort of capital structure could look like for your business. But those are a few that I know can have really good conversations with founders and help guide them.
Awesome. I'm just looking at, we've covered so much already, which I love.
I'm shocked.
Amazing. So I want to talk about founders raising money. You talk to a lot of founders. How should they go about this? What should their mindset be in terms of talking with investors? Because I feel like I talk to a lot of founders after they've spoken to 10 plus investors and they're just upset.
Yeah. Disheartened.
Yeah, disheartened. Their confidence is completely gone. They have heard all kinds of feedback about their company that they don't like, or that they feel other people know more than they do and they should listen to. I tell a lot of founders, I'm like, listen, you're the expert in your company, and you need to be able to support your numbers and support your strategy. And you're going to have a lot of feedback from people who are just learning a little bit about your company, who have seen a lot. And yes, they're smart people. But if you're confident in your direction, that's what you're doing right now. So how do you work with founders on that?
Yeah. So my perspective on it is if you've done the right preparation, and I'll get into what I mean by that, but if you've done the right preparation, then a VC saying no thank you, but I'd love to stay connected is everyone's favorite. Redirection, not rejection, right?
Yeah.
Because preparation means you've been building relationships within the space. You've taken opportunities to collect feedback. You've gotten to know investors, other founders, what they've learned from fundraising, what they're learning across their business, building something like you, or just building.
Yeah.
And to your point, you're very confident about what your business looks like, why you believe this space is going to be successful, why you believe you're the one to be successful, what your path to profitability looks like, especially in today's climate. Like, I think a lot of people a couple years ago could raise off of really successful revenue or top line.
Yeah.
And no idea from a profitability standpoint. Times have changed, and you don't have to be profitable, but you have to understand what the levers you could pull would be to get there.
Yeah.
And being able to have that conversation confidently, it's what's going to set you up for success in conversations with investors and also in your business, I'd argue. And I think that so much of that is being so undeniable in the success of your business that the whole point of the deck, of the operating model, of all the conversations you have with investors is to build their confidence in what you're building. Everything is for that purpose. And so the more time you spend kind of digging into the workings of your business, looking at what you made in a week and understanding why, like what are your unit economics? If you were to hit a higher level MOQ or minimum order quantity, what would your cost of goods be, and what would that mean for your profitability, and what would that mean for your fixed costs? And if you change the channels that you're in, how do your margins shift? How does that tell the story? The more time you spend getting comfortable with how those metrics impact your decisions as a founder, the more confident you will be when an investor asks you questions about it, and the better you will be set up for discussions when you're ready to fundraise.
Yes. But if you've heard 10 people say we just can't come to conviction about this space, what do you do? Plan B? Plan C? Figure it out?
I think a big piece is those aren't the right investors for you.
Yeah. I think there's a couple. I think it's not the right investors for you, but I also think that there are a lot of founders out there that I see who are waiting. We have these plans. We're waiting until we get the money to do X, Y, and Z. And it's like, you know what? You have to make that momentum happen regardless.
Yeah. Because the alternative is
you have to find a way. Yeah. Or go get a job.
Yeah. Make it part-time until you can sustain it.
Yeah.
Yeah. And I think some of it too is remembering, right? Like we talked about the fact that fundraising is an additional job.
Yeah.
And you see a lot of the success stories of people closing in one call, right? Which I'm always like, no, go in. This is my opinion on the matter is go into every conversation to build a relationship. Do not treat it like a transaction. If you come out with a check, awesome. But go in to build a relationship.
Yeah.
I believe that will always serve you well. There are people who disagree with me on that. Kudos to them. I don't go in trying to make a sale. And I think that confidence, that position of power, knowing what you would do if you don't raise the capital.
Yes.
Right? Like what is
important?
Scenario planning. Being a little bit pessimistic, right? Like we've talked before, like I consider myself a realist. I probably lean pessimistic. I've got scenarios for days. Like I know if the train's not running when I need to go home, I've got a plan.
Yeah.
I will walk to the ferry. Like I'll fly home. Like there will be ways I will get out of here. You will not trap me. And so I encourage that same sort of behavior with the founders that I work with is think about what your options are. Think about how you would spend the funds. Think about some different scenarios of what you could raise. Think about what it would take for you to, meet scenario A in terms of growth perspective. And like, if you don't, how do you start to just continue to build a sustainable business? What would you do to become profitable sooner so that you can start to put some of that cash back into your business instead of requiring outside capital and giving away some of the keys to your kingdom? And so much of it is to your point with optionality, but it's also on the investor side, I like to ask, besides what do you want from the relationship besides capital, is also what are you going to do if you don't raise the money?
Yeah.
And sometimes the way that founders answer the question puts a little alarm bell in my head where I'm like, I want to see your balance sheet. Because like I immediately know you got a problem. Like I could tell by the panic. And like I love a balance sheet. Like give me that. Like we always, for VHS Ventures, we believe strongly in looking at balance sheets, especially for inventory-based businesses. So yeah, the more you're thinking about scenario planning, options, balancing the optimism that I think naturally comes with being an excellent founder with the sort of just doomsday planning that comes with being an excellent operator will serve you well and only build your confidence in these conversations.
I'm just letting that sit for a second. But optionality is the most important thing. I mean, it really is. You need to have an answer to that question of what you'll do, and you can't have the fear of God visible.
Or there is no, like, we will. I think my favorite is when people say there is no plan B. Because I'm like, that's my least favorite answer. Like, I've never answered any question. Like, I'm on some kind of, like, adventure movie. Like, I could never. I'm like, oh, no, we've got A to Z ready to go. You don't need A to Z, but maybe just have what it would take for you to start, putting cash back into your business or alternative financing options that you would explore.
I think the dichotomy is difficult. Having a visionary founder who is out there raising, totally fixated on this outcome, is also the same person who often has to look at the disappearing runway. And you need to be able to hold that within the same person without losing your mind on a daily basis. But, also to have those plans, but not veer off your plan A until you make a decision.
Yes.
Because if you're somewhere in between plan A and plan B, straddling, it's not going to work.
The worst, what is it? It's better a bad decision than no decision at all.
Yeah.
And so I agree. I tend to think I have the most respect for founders because you truly, it's your baby, it's your business. You have to kind of want to try everything. You can very quickly be like, I'm not good at these things or I don't want to do these things. And then absolutely bring in people to manage it for you. And I would argue stay lean as long as you can.
Yeah.
So bear in mind, I am a fractional, but I would say this even if I wasn't, bring in senior fractional talent so that you're not investing money to create more for you to manage by building out, you might be super excited about building out your team early and that's great, but like you have to manage that team. So like bring in fractional talent, stay lean as long as you can, focus on what you're good at. But at the end of the day, as a founder, to your point, you are selling the dream. What is it? Building the plane, flying the plane, selling the dream, proving out the traction. You're doing all these things all at the same time.
You're jumping off a cliff and building the plane at the same time.
Exactly.
Yeah.
And part of it is like, it's what you signed up for. Like, it's a little bit like you're a founder. Like, how exciting. But I think some of that too is you're going to learn pretty quickly that every day is uncomfortable, right? Like everything's uncomfortable. To your point, I talk to a lot of founders who they come out of calls, whether with investors or co-founders or team members, and it's just a tough day.
Yeah.
And like I've had a client before where she was like, I really don't want to have this conversation with, her co-founder. And I was like, I totally get it. I was like, it's your company. You're a leader. It's got to be you.
Yeah.
And so it was a little bit of like pep talk, get back in there. But I also am like, we're all doing that every day, no matter what business you're in. Yeah. But it is uniquely difficult for a founder because you at some point are wearing all the hats, even if they're hats that you don't like how they look on you.
Yeah.
You have to wear them.
I find a therapist, a coach, an AI buddy. These are all good places to...
A network of peers helps.
Yes, a network of peers who are also founders. These are also safe spaces where you can say, I'm about to not do this any longer.
Yes. Talk me down. Talk me off the cliff.
Or walk me through the options. Or let me vent so that I can get this out of my system for today so I can show up tomorrow again. Whatever those things are. Whatever outlet, you need an outlet.
Yes. Yeah.
Because there are going to be those days.
100%. And I imagine you serve that role for a lot of your clients.
Yeah.
I've
do.
served that role for some of my clients.
I do, but now in my current role, I have to be able to, I want to serve that role, but sometimes my clients are constantly pitching me.
Mm.
Not for investment, but showing me the upside, the best story, and not opening up for what's going on inside.
Vulnerability. Yeah.
Yeah. And so I'd like to be that to everybody, but I'm not always. Yeah.
I get a lot of the vulnerability.
Mm-hmm.
And I feel it's one of the more rewarding parts of what I do.
Yeah.
And it was one of the most surprising because I don't find myself to be naturally warm and fuzzy.
Mm-hmm.
But I think to your point, this is a hard job. And I say it having not been in your shoes, having not been a founder. And I look at some of the people that I have the opportunity to work with, and I'm so inspired by what they're doing because I think it is the hardest job. I have so much respect for it. And so I love, like, what I do is I shine light on them. I empower them with the confidence they need to talk about a financial model that's hopefully only like 3 tabs, not 20, that you would get from like an excellent, very robust financial consultant, right? Like there's a lot of really great models. You don't have revenue, you don't need a 20-page model.
Yes.
You need something that helps you make decisions so that you can have a confident conversation across the table from an investor without having to open up your model and look for the, what the number was.
Mm-hmm.
And so I so enjoy being that for a lot of founders that I work with, but I also encourage individuals to, whether it's a co-founder that you have or if you're hungry for that sort of connection, but find people who are building. And what they're building could look very similar. It could be in a totally different space, but like find communities of people that are building, share stories, find places where you can show your vulnerability because it will build up.
Yeah.
And it will like allow yourself to feel it because every day is a different roller coaster. You're going to have an excellent conversation. The next day they're going to pass. Give yourself grace.
And it's better to let those emotions leak out in a safe space than when you get asked about your runway in a VC conversation.
And they come out in a weird way. Yeah. It was like all hiding in that question, and then you just start sobbing. It'll happen. Like that's where it's like it's like you stub your toe and just start crying profusely about like cash runway. So yes, like manage it's therapy, it's mentors, it's consultative relationships that allow you to like have a safe space so you're not offloading onto your team or to investors, right? Finding a way to make sure that you feel supported, but also being comfortable with the fact that this is, I think being a founder is one of the scariest, most impressive things that you can choose to do.
Yeah. What do you wish VCs understood about CPG that you don't think they do?
I think what a successful consumer business looks like for venture is very different than for tech.
Mm-hmm.
It's usually not investing in the unicorns and the moonshots and expecting like crazy amounts of growth. It's usually the doubles, the triples, sustainable business models, paths to profitability.
Yeah.
Founders that are thoughtful about what it takes to be capital efficient and adapt. And so I think it's having that perspective on like investing in a consumer business looks totally different than what you've seen of some of these like really, really strong tech performers.
Mm-hmm.
It's actually this week, Olaplex sold the hair care brand to Henkel.
Yeah.
Out of, I think, Germany.
Pretty amazing.
It's very interesting. Yeah. Much lower than what they IPO'd at in terms of valuation perspective. But one of the things that I think is interesting for that with a consumer brand is they created incredible growth through the professional channel when they were first launched. And so their growth trajectory looked a lot different than a traditional consumer brand. They looked a little bit more like a software business. They had all of these like really low costs to acquire customers because they had so many salons talking about their product. And then you had, okay, like now how do we grow? What's next? You go into a business like Sephora and the margins are very different. What it takes to be successful is very different. And it doesn't continue that sort of growth pattern. And so it's an example of like consumer is just on a totally different trajectory. And even if you think the business might be looking like a different archetype of like a little bit more like software, like that's super interesting. Lean into that. But there's still very different challenges between a consumer business and a tech business. And the other thing I think to consider is from what I've seen, consumer founders don't always look like, I think, what you see in terms of like tech founders and like Silicon Valley founders. But they remind me of some of my favorite people I've worked with in startups, where they just want to help. They want to find things to do. They're incredibly thoughtful about cash management, because you have to be, as we talked about, with like the challenges of a cash flow cycle in inventory-based business. And so the unique profile and adaptability that you get from even just sharing like a 10-minute conversation with founders of CPG is so enriching. And I think more VCs can there's so much value to learning from these founders that I think is really unique about just that profile. And at the end of the day, we're all consumers, right? When you think about the market, we all eat. Most of us have a skincare routine. It's probably a strong statement. A lot of people have a skincare routine. A lot of people have a pet. There's all of these consumer spaces that are so easy to look at, touch, feel, interact with, test, taste. And that's so exciting, and it makes it much more believable. You can truly interact with the founders, interact with the products in a way that's so exciting.
Yeah.
And I think has earned itself more value than a lot of VCs sometimes realize in the consumer space.
Yeah. Yeah. Well, do you have any advice for founders who are thinking about starting a CPG brand right now? Is that less proud?
That's helpful. Yes. Thank you. Well, I think sort of combining some of the things we talked about. One is be thoughtful about why you want to raise. What do you want out of the capital?
Money.
Besides money, because that's the whole point, right? Like like we talked about, there's so many different places you can raise money from. You're going to see and hear a ton of people shouting about where they've gotten money from, and like kudos to them. Doesn't mean you have to go the same path. So think about what a successful brand looks like to you. Think about what scale means to you. And even like one of my clients, for example, she's right now starting a business on the side of her full-time job. And so I asked her, I was like, in 3 months' time, where do you want to be?
Yeah.
Where do you want this to be? What does success look like for you? And she said, she's like, I don't know if I want this to be huge yet. I was like, okay. I have another client. They want to be cross-category leader in food. Okay. So I think it's ask yourself where you want this to go. Based on where you want it to go, there might be some different institutional finance or not that might make more sense for you. And then put yourself in a position to be picky. Be prepared. Start networking a year, if not more, before you need to raise.
Yeah.
It's like, do not open LinkedIn the day you need a job. Put yourself in the position to be picky, because you've spent time thinking through or debating or asking someone for help about what it would take to get your business to a more sustainable, profitable perspective. And so just get curious about these pieces of your business. Get excited about it. Absolutely build the product and brand that you love and the whole reason you're setting out to do this. But put yourself in the position to be very confident in front of investors. And then go back and be able to build the brand and product that you love. Basically make it so that this is a piece of what you have to do and doesn't become that like sort of consistent second job and that sort of disheartening constant slog.
And being confident in front of investors means either doing a lot of research and preparation or having help with that. Like there are free resources out there. You could find your favorite AI buddy and ask the top 100 questions that investors will ask you. You can upload your pitch deck. You can talk about your business and say, what am I missing here? What are the red flags? You can do all this work. And then if you don't find that helpful, you can also hire people that are going to get you to there, whether it's flagging, identifying the red flags and helping you figure out how to address those, or just making you prepare.
Yeah.
Yeah.
And I think if you're starting a CPG business too, the exciting thing to remember is stay close to your customer.
Oh, yeah.
No matter how big you
Most
get,
important thing.
no matter how big your team gets, how exciting that you get to put that product in someone's hands or watch them in front of a shelf or see how they use it and see if it's different than what you would expect. Do they smell it? I don't know what it is, but like hopefully it's a skincare, something they'd want to smell.
Oh, I have an amazing skincare product I smell. I also use it.
After. We'll discuss this.
Yes.
just to smell. just to be there. But yeah, I think that's one of the most exciting things is like you've got so many founders who are like, I want to be a household name. I want to be the next, I want to be the road of X, right? Like I want to be the next huge consumer brand. No matter how small you're starting, how big you're starting, one of the best things I think about a consumer brand is you get to interact with your customers
And one of the
Never lose that.
most fun things is to see your product on their shelf in the kitchen or out in the wild or being used or being talked about, and you didn't pay for that to happen. That's pretty amazing.
Yeah.
Very cool. Well, I really appreciate you coming in today.
Thank you so much for having me. It was an absolute honor to be
I
here
think
with
this
you.
conversation is going to be helpful.
I hope so.
I know it will be.
Good.
And I'm Helena Fogarty, and this was